Hi, I'm Gwen Preston of Resource Maven. I'm here with Claude Lemasson of Eastmain Resources. We're at the Metals Investor Forum here in Vancouver in the beginning of January, and what we're just talking about is a more bullish outlook for commodities and for gold than we've seen for a while, so that's exciting. Yes. Eastmain, really interesting company, gone through a huge transition in the last 2 years. You've been a big part of that. Let's focus right in on the key asset, which is the Clearwater asset with the Eau Claire deposit. I love how those are the same thing in two different languages, but anyways. So Clearwater, asset that's been around for quite a while. New management has really added to the information, and that to me has changed the deposit to the positive a lot. So why don't you take us through a little bit of how that process went for you?
Sure. So when I took over the company, which was in April 2016, we decided to embark on really more extensive drilling and what's considered infill drilling mostly. And the reason why is we looked at the resource that we had. We had 200,000 meters of drilling within this resource. We wanted to move towards economic studies on it, but we felt that there was a requirement for tighter spacing to understand the fact that it's a narrow vein, high-grade gold narrow vein system. So we proceeded doing actually 40% more drilling, so 80,000 more meters. And then we completed that work in the summer of 2017. And then that allowed us to finish a new resource, which came out in September 2017, right. About 5-6 months ago.
Right, and I mean, like you say, this is a stacked vein deposit. Veins continuity is the big question, so tight spacing for drilling is really important. In addition, not only did you guys put the tighter spacing in so you have better confidence in the continuity of the veins, you also distinguish two different kinds of vein mineralization.
Yeah, so as we were doing the drilling, we were able to come up with a different interpretation. We had the quartz tourmaline veins, which are kind of the main veins if you want, but then we also knew we had other material, a schist type material that carried gold. So these high-grade schist veins are actually larger, wider, and more continuous than the quartz tourmaline vein. And the fact that we were able to do tighter spacing on the drilling really allowed us to much better understand how the two sets of veins interact. Mm-hmm. And by showing that continuity, it really gave us a new interpretation and a new edge in the understanding of the deposit.
And that's so important given the stage that this project's at, which is now you're about to wrap economics around it for the first time. And in advance of that, you have a deposit where not only do you just have tighter spacing, but you increase the grade, the resource makes a lot more sense in terms of the assumptions you were using for mining costs and for recoveries and for metal prices. You divided it into open pit and underground components. You understand the two different kinds of mineralization that are there. There's a lot of drilling, and the market thought it was a bit boring because infill drilling the market doesn't have a lot of patience for. Fair enough. But this was the heavy lifting that just needed to happen.
It did need to happen, and the fact that we needed to put parameters that were much more conservative around what was known, and that also meant by doing that, to actually get rid of some of the what we call the marginal tons and marginal ounces. Because we're looking at a deposit where we want this to work from an economic perspective. We want to prove that we have a mine. And the fact that, by getting rid of some of these marginal tons, obviously, by default, the grade increased, which was really very important. We increased the grade by over 50% to above 6 grams. What's interesting is we've got now a smaller pit, but very high grade, just under 6 grams. But now we're also going underground with over 6 grams. And that is key to make this mine work. And for us, that was essential to be able to move to the preliminary economic assessment, which we're currently working on and will be delivered in late April or early May.
Right. And this is the thing that people are now really keen for. I mean, the market was very interested in the change of management, the new approach. There's been a change of shareholders. A lot have come in who understand where this project's now going, what a 6 gram open pit deposit means in an easy jurisdiction like Quebec. These things are all good. Now the PEA is going to sort of lock some of that down and hopefully just, be that boost of energy.
Yeah, absolutely. And when we look at this deposit, I mean, I know a lot of people look at this, we're in a high grade range, the 6 to 9 gram range. So, the Eleanor mine, which is operated by Goldcorp, one of their flagship mines, just about 50 kilometers to the north, is an underground mine that currently produces at around 5.8 grams per ton. And we're actually going to come in with a grade potentially a slightly bit higher than this within our mine. So for us, that was key. And I think we are where we want to be. And now it's a question of publishing this PEA and really showing that we have a very strong projects with good returns and on which we can move forward.
Perfect. Eastmain certainly has other projects, but in the interest of keeping things focused, we'll just leave it at that. There's like 13 others in the portfolio.
Yeah, in total, 13 other properties, two key projects that we're also moving forward on, and we've had very positive results on those between resources and discoveries, and we'll continue to advance those ones as well.
Perfect. Well, best of luck. I look forward to the study.
Thank you, Gwen.
Thanks for watching.